What's up, everyone? So today I'm gonna talk about the good and bad about dividend investment. So, what is dividend investment? Well, cut it simple. It's investing in companies that you have ownership in that will pay you a portion of their profit. It could come from their asset. It could come from pretty much anything you can think of, but it's a way for them to pay you back. So, is dividend investing worth it? Many investors are attracted to dividend interest because it is one of the few ways to have passive incomes. Ownership of a share or entity, investor to dividend, usually every quarter. Now, that's very attractive as you own a piece of company that you invest in and they continue paying out dividend. Now, some of the pros of dividend investment are the benefit of dividend investments, dual returns, meaning you get a source of regular income and a capital appreciation on the stock. Now, that's if you pick the right company, the right stock, and number two, it's low volatility. Now, the low volatility means that it's a pretty stable company. It doesn't really go up and down crazily, and you can pretty much have a stable income off of it. And thirdly, it's the compounding reinvestment of the dividend through the dividend drips, which will significantly increase the um, investment. So it will help you balance in and everything like that. Now, the key matrix evaluation, this is annual dividends by the stock price, and higher yield can be more attractive, right? There's very high yield dividend stocks. And that doesn't mean they're a good stock. This is where you have to do your own research and due diligence to see if it gives you a good payout. Now, payout ratio is the ratio that indicates the percentage earning payout as a dividend. Now, the a key success as for a good dividend portfolio is that you have diversified your dividend portfolio. And that means you diversify in other sectors, not all in just one. And you keep a good, strong track record of it. Now, the cons of the dividend investment is number one, low growth potential. So most of these dividend paying stocks are stable companies, which means that they either have not don't have much room to grow and are trying to give back to their investors, or they just are in real estate or in one of those companies that they don't have a high return. So they, instead of focusing on appreciation of the stock, they give you back your money. And all companies promise to pay a dividend, but it doesn't come to it, and that people just sell the stocks for the profits. I don't want to sit there and try to sell my stocks, wait on the money, wait depending on the market. I just want a passive income. This is one reason I'm doing it. The low growth potential, I counter that by looking for a company that doesn't have it, but it takes a long time to find these companies. Now, number two, the dividend cut. So dividends are not guaranteed by any company. Even the dividend aristocrats, they're not promising that they can always pay you a dividend. So you have to pay attention and stay on top of your investments. And that's one of the downsides. You can't really say, hey, I'm going to be paying dividends every quarter. So, and then one quarter they don't. Well, this is where you have to pick a good stock that has a good history. And that's a really big con. You don't know, you can't really predict. But hey, dividend cuts can happen and it's out of your control. But If you stay on top of your portfolio, you can keep track of it. Number 3 is the taxation is a very big con. You have to pay taxes on it at your normal tax rate. So make sure you pay attention to your taxation, as it could cause a issue with you later. Now, the number 4 is the high payout risk. So companies that pay a high dividend yield usually might be at risk at financial instability. So you will see dividend yields that will give you upwards of 10%. And I don't like those dividends. I tried to purchase some and they just don't grow. They just kind of slowly decline, some of them. And you have to really pay attention. Just because it has a high dividend yield does not mean they're a good company. I always recommend this is investment for passive income, and make sure you invest as such and pick stable companies. This is a part of your retirement and shouldn't really be your whole retirement. Dividends should be how can I say it? It should be part of your portfolio and not treated as the main of your portfolio, and not totally focus on it, because you need to diversify your portfolios. If you don't diversify your portfolios, then you have an issue if you're only all in on dividends. So you should mix up your portfolio with some dividends and some not dividends for the growth. Now, what accounts you put them in, that's all up to you, but I pretty much at this point I focus on dividend investment for passive income. So I am researching that right now. So number 5 is limited upside potential. Dividends paying stocks often have limited upside potential. And this is very true. Look at Coca-Cola. It really cannot grow that much more. So it's going to have limited growth factors. So if you want to find a company that is a slam dunk and can run like Tesla did from 200 to 500, then you're gonna take a long time to find that stock. So it takes time, and that's where you have to do your due diligence on finding that stock. This is the reason why a lot of people don't like dividend investment, because it's not as easy as regular investing, and some people just don't like dividend at all and don't invest in, because they believe that the money should stay in the company, and so they can grow the company to raise the value of the company. Now, number 6 is sector concentration. Dividend stocks are often concentrated in certain sector like utilities, consumers, and that is very true. Now, dividends are mainly in consumables like ExxonMobil, like oil and gas, and cell phone companies like AT&T, and they generally are the few that gives dividend, communications, and the consumables. So it makes it really hard to diversify your portfolio, but doesn't mean it's impossible. It just makes it extremely hard, and some people don't have the time to research that far in depth, but that's all up to you. This is your retirement. I figured if you are going to take your time to pick something and invest your money, you might as well spend as much time as you can so you don't lose out on your money. Now, thanks for watching. Those are the pros and cons of dividend investment, and stay tuned for another video.